Yeah, welcome to my channel, guys. So this is another video. In this video, I'm going to re-explain how to identify your inducement, because inducement is very important when it comes to SMC. So in another word for inducement is liquidity. So this is what they use to like induce people or to lock people into the, let's say the market want to sell. There is a way that the market will give you this mindset that I want to buy. So you will jump into it and the market will now sell on you. So it prompts your premature entry. So those are part of the trap that you have to identify in the market. So let's dive into it. These are, let's say the market is coming down. Let's say we have a bearish momentum like this. So look at this. This inducement, this inducement. But which one are we going to use? Which one are we going to operate with? This is what we are going to operate with. The first one, or let me say the last one that the market created, or let me say the recent one that the market created is what we want to use. It's not that maybe market cannot come for this, but in order to have our structure complete, at least market must take this recent one. So let's say in a situation whereby markets do this, take this one, then drop like this. So it means that we have a break of structure like this. So if you look at it, where is our recent pullback that the market did? Then we'll have to mark this level. There is also a liquidity here, but even there is a liquidity at the top. But according to the structure, we are expecting this top to be protected, and for this market to continue dropping, or for it to continue creating structure, we want to see another uh, inducement taken out. So let's say in a situation that market refuses to take inducement and drop, it means that this inducement is the recent one. So let's say market refuses to take inducement and drop. We are not having break of structure here. We are not having break of structure here. Market is just accumulating liquidity. All these are liquidity. So, but this high must be protected if the structure still wants to be intact. Market must not close above this high. So let's say you are trying to sell here now. Maybe you sold here, you sold there. At the end of the day, that's when you will see the situation whereby market will just flash up, take out all this liquidity, then drop. So what we are going to focus on is whenever market take out this high, this last pullback, then we identify that inducement has been taken. That doesn't stop market from coming here, but at least this is what we want the market to take. So if the market now like and come down and do more of this, then as long as this high is being protected, all this is also a liquidity that the market is building for itself when it's coming down. So you can see that's why you have a movement like this. So this is just all you need to know. So, and this structure, we have the high here, then we have the break of structure here like this. We have the break of structure here. So you don't need much. All you need to just identify, but most importantly, you just have to go and watch my video on how to identify valid pullback, because there's no way you can identify inducement, there's no way you can identify your POIs or your valid order block or your structure if you don't understand valid pullback. Why these pullback are valid? Why are they valid? What make them valid? So that's the foundation for this. So if you understand that, then in order to get to identify your inducement will be simple. So let's say something like this happened in the market. Sorry. Let's say we had a situation whereby market take out this high and drop. These our inducements. And this supposed to be what? Supposed to be our break of structure. Yes, this is also valid. But this structure is not complete, yes, because market do not have inducement. So automatically this high will serve as the inducement. So it means that this level is not yet confirmed as break of structure, because you can see a situation whereby market will now go back and take out this level, then drop. Then some people will say market has changed character and they will be waiting for here to buy, and they will be stopped in the market. You know, they will be trapped because they don't really understand the inducement. So it means that we will shift this inducement to this level like this. This inducement will now will now shift it to this level. Then because of what? Market refused to create any inducement. Assuming that market creates another pullback and drop, after this has happened, then we can have a break of structure here, then this level will be protected. But in the absence of that, then this level will be our new inducement. So, and this structure will remain intact. So this high will also be our high, while this low will be our low. Then the inducement from here will now be shifted to this level. So, and the process continues. So that's how you identify valid inducement and how to avoid the trap in the market. And this inducement has the purpose why it happens. So, but I don't want to go into that, how to be able to get to understand the inducement in the depth side of it. So I don't want to go into that. I just want to keep all this process simple. All you need to understand is this in the market. Once you understand this will help you to understand your directional bias. Okay, where are we going to? Okay, market has formed a structure. Then this happen in any time frame, both higher or lower time frame. The difference is just like the structure will be creating, let's say in lower time frame like 5 minutes, 15 minutes, the structure will be, or 1 minute, the structure will be creating fast. So you can have break of structure to this side before you know a market change character, before you know it, because it's very, very volatile at that lower level. But when you go to 1 hour, 4 hours, and daily, the structure takes time to create, and from there you can now scale down to lower time frame to now trade in the directional bias. So if you look at it now, let's say this is a daily structure now, and you were able to identify your inducement and you were able to identify your structure, and market take out this inducement, and let's say probably market mitigate your daily extreme POI. You have all this move to trade in lower time frame, be you 1 hour or 15 minutes. This is exactly how I trade. The same process, all you need to do is to just go to your 1 hour or your lower time frame entry and start trading to this direction. Along the line, market can give you in that lower time frame, market might give you or can give you buy signal. You will ignore it because you know that your higher time frame is coming down to this level. This will give you more clarity in the market. So if you are trying to sell from here, from this level, if you are trying to sell from here, maybe in 1 hour, and market gets to this place, is trying to give you buy signal, you ignore it. You allow the market to turn back to sell signal, then you do what? You continue selling. You continue selling. So the same thing might happen here. You ignore the buy here, then you continue selling until market gets to this level. So this can happen a whole week, if not even a whole month. So you know that for this, until daily time frame get to this break of structure, all you have to do in this pair is to be selling in your lower time frame. That will give you more clarity. So this is very, very important, guys. So I don't want this video to be long. Let me show you briefly on the chart and see, and let you see what happened. So as you can see, we were bullish before, then we were bullish like this, then suddenly we had what? We had a bearish sign. So let me say this is the last structure that the market created. Why? Because it took out this inducement, then we have something like this, the market blew up. So we have break of structure. Then you try to create another inducement, then blah blah blah, no valid, no, then okay, market came back from this, but no, it's not valid. So it's still part of the pullback. So, and as you can see at the end of the day, we had change of character here. So immediately we had change of character, you notice that I said once we have change of character, this high must be protected because market has given us the sign that I want to sell. So what are you going to do? You now come from this high, you try to look for your valid pullback like this, then you wait for market to take out this level, then probably wait for your POI. You see how nicely market come down to your POI, and see what? You see that the market just starts tanking. So, so depending on how you, this is all just you need to understand in the market. So this is where we have break of structure. This is where we have break of structure. You see, market tapping, take out this inducement and mitigate. So you see, after this, you understand that this is our structure. I don't want to go deep into the structure, but I just want to explain this briefly. So you can see this is our high that must be protected. And what happened? We have to start marking our pullback until market take out the recent one. So if you look at this from this high, we have something like this. These are the noise that the market was making. Sorry, my my hand is not straight with it. So you can see this is the pullback that the market has been doing. So you can see the market pull back, then drop, then like this. We have small pullback. We have, so you see, this is the last one that the market did and market drop. So if you look at the market took out this level, it's supposed to give us break of structure, but there is no valid pullback below this level, below this break of structure. So it means that this one, this pullback is inside this move. So as I explained in the image like this, as I explained here, you can see when market took out this, he tried to drop, but on his way coming down, assuming that after break of this structure, market created another pullback and drop, we'll have had that as an inducement. But in this scenario now, there is no pullback after we break this structure. After we break down this structure, we don't have any pullback like this. After we break down this structure, there's no valid pullback. So it means that this high will be our inducement. And you see how market went back there nicely, take out that level, then create another break of structure. So that's how the process will continue. The same thing happens there. You can see when we had a break of structure like this, market created this, push up, create this like this, then drop. It means that this is our recent pullback. This is the inducement. And market went back, take out that inducement, mitigate something here. We have a clear order block here that the market mitigates. So this is not about the entry video, it's just about inducement. So I see, but for no reason you must wait for market to clear this level out. So, and you see, market just did what? Mitigate that level and drop. So that's just all about inducement. You can rewatch this video over and over again. If you have any question, feel free to drop it in the comment section. If you want me to do any video that you are not clear with, any part, just let me know. I will work on it and make sure that I try my best to make it more clearer for you guys. So that's it, guys. So bye for now.